So the dollar has been the world's reserve currency, and it's losing that status since we grabbed the Russian bonds in 2022. Oil transactions used to be 95% dollar-based. They're now 65% dollar-based. Other countries realize what we've done to our currency, and they're trading away from the dollar. In a mathematically driven system where they have to continually generate inflation to prevent a collapse, and we're pretty sure they won't let a collapse take place, because they didn't in 08 and they didn't in COVID. You need to own things that the government can't print. A lot of people stand up and say, damn it, this inflation's killing us. Would somebody please take us back to sound money? Please.
The U.S. government's fiscal and monetary policies are further accelerating the decline of the dollar. Persistent inflation, driven by excessive money printing, has devalued the currency over time. As Lepard points out, foreign leaders and investors are increasingly aware of this trend. Even figures like Vladimir Putin have criticized the dollar, recognizing that holding U.S. mafia assets exposes them to continuous debasement. For individuals and institutions seeking to preserve wealth, the solution lies in assets that cannot be printed or manipulated by governments. Lepard highlights three primary forms of sound money: gold, silver, and Bitcoin. Gold and silver have long served as monetary assets, while Bitcoin represents a new emerging form of digital sound money.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The world needs a neutral reserve currency. The world needs a reserve currency, and of course it's been the dollar since we had the Bretton Woods system and then the petrodollar, which kind of came after that. What's going on right now is that system is fading. It hasn't been replaced, it's still there, but it's fading, and we're getting into what I would call a multi-currency world, where the Chinese are buying oil from the Saudis, they're paying in yuan. If the Saudi guy doesn't need a piece of Chinese equipment, he might say, fine, take that yuan and convert it into gold. I know the gold will hold its value. Before 2014, he might have said, take that yuan and convert it into US Treasury bills. Well, he probably would have paid for it in US Treasury bills. China would have transacted with Saudis in Treasury bills, but in US dollars. But what I think is going, and so your question of, do we have to reset it or can others reset it first? Well, the others are kind of already resetting it. The trend is away from the dollar. And so I think we're going to live in a quote unquote multi-currency world where you're going to have, the dollar, the yuan, the euro, the Japanese yen, gold and silver and Bitcoin are all going to be kind of competing for being the monetary solution. And, my view is that in terms of neutral reserve assets, the two that fit the bill are gold and Bitcoin. And so their relative share of all these transactions is going to continue to grow. But let's be fair and honest. We are a very long ways away from having the dollar fail as a reserve currency. It's just, but you can see, once again, you can see the trend. The trend is the dollar is losing market share. And the reason for that is because of the way the US federal government is behaving. And, these other countries aren't stupid. And they're like, hang on a second. Putin even said it. Putin's, not a good guy at all, not somebody I like or support, but not a stupid man. And he said, why should I hold anything that, the West, the US dollar, which is just programmed to debase at 7 or 8% a year. He literally said that. They get it, and more people are coming to see it in that way. And so, this extraordinary privilege that the US had where we could print these dollars and send them around the world and get people to send us their exports for dollars, that's not going to be so easy when they say, I'd prefer you don't pay me in dollars, I'd prefer you pay me in gold or Bitcoin. And that's happening. In a mathematically driven system where they have to continually generate inflation to prevent a collapse, and we're pretty sure they won't let a collapse take place, because they didn't in 08 and they didn't in COVID, you need to own things that the government can't print. Okay, so real estate's a solution, a negative, and I deal with that in the book, but the negative there is it's got taxes and carrying costs and so forth. But the most obvious solutions are what I consider the two forms of sound money, gold, three forms of sound money, really, gold, silver, and Bitcoin. Gold and silver are analog sound money, 5,000 plus years of history. Everybody knows their money. They can't be debased. You know what they are. And Bitcoin is a new and emerging class of sound money, still emerging, still very volatile and risky, but it's a digitally scarce asset. And when Bitcoin got invented, they invented digital scarcity. This is a big deal. Before the airplane, people didn't fly. After the airplane, people flew. Before, Bitcoin, there was no digital scarcity. And a lot of people tried to create it. And there was a problem called the Byzantine generals problem, which is how do you trust a lot of people you don't know that they're not going to cheat? And that's what Bitcoin solved. It was a mathematical problem that Bitcoin solved. And so in my opinion, the two soundest solutions to the money, to the printing are, Bitcoin and gold. Now, and by the way, gold has done a fabulous job of protecting you from debasement since '71. It's basically tracked with inflation. It's a little behind the stock market if you reinvest dividends on a tax-free basis, but they're actually relatively close. So gold is kind of your, in my view, it's the new bond. It's safe. The volatility is low. The biggest drawdown is, maybe the 1 year after 1980 where it got drawn down in the 20 or 30% range. But in general, gold's up 66% of the years on balance. And then the other 33% when it's not up, it's not down by much. So gold protects your purchasing power. Bitcoin's kind of like a growth equity. It's kind of becoming the newer form of gold, a digital form of gold. And young people seem to prefer Bitcoin to gold and it's got advantages. You can see, the blockchain. You don't have the paper gold problem, et cetera, et cetera. So these are the two solutions that I recommend highly, and the book talks about both of them extensively. When that occurs, a lot of people stand up and say, damn it, this inflation's killing us. Would somebody please take us back to sound money? Please. And, if there are enough of us, right now, I'd put the people who understand this issue maybe at the 5% level, maybe higher, maybe lower, but certainly not big. So we got to get a much bigger groundswell of people who understand the issue. And then we'll have politicians who will stand up and say, well, I want to be elected. And I know that one way to get elected is to be a sound money person. So I'm a sound money person. Well, then people vote for them. And you can see where this goes, right?
Lepard draws parallels to the early days of the internet, when slow dial-up connections made it seem impractical for widespread use. Just as technology advanced to make the internet fast and ubiquitous, Bitcoin's infrastructure is evolving to support mass adoption. He compares Bitcoin's trajectory to that of mobile phones, which were once expensive and inconvenient, but are now essential to daily life. Over time, Bitcoin's usability will improve, making it more attractive for global commerce.
Gold hasn't really been a part of the monetary system since the 1920s. My grandfather told me about paying for things with gold coins, but you and I, gold coins are, they're collector's items now, right? There's nobody who pays for anything with gold or silver, or I should say it's very rare, right? And it's, while we know a coin has the value that it has, it's hard to divide it up. And that's why silver has a lot of value in smaller transactions versus gold. And it's kind of more the people's money. But the beautiful thing about Bitcoin, for those who aren't aware, is that each one Bitcoin represents 100 million Satoshis. A Satoshi is the smallest unit of account in a Bitcoin. So it can be divided up a lot. And
what is it, 8 decimal places?
Yeah. So I could send you 1,000 Satoshis or 2,000 Satoshis or whatever it might be. And, and that's a very easy transaction to do. Now, one thing we should talk about here is obviously today, Bitcoin's not really being used heavily for transactions because the main blockchain that Bitcoin is running on settles every 10 minutes. And the average transaction cost right now, I think, is running around $3. Well, you're not going to buy a cup of coffee with a transaction that takes $3 to do it. However, as we also are aware, many people are aware, there's a layer 2 network forming over and above Bitcoin called the Lightning Network, which settles back to the main chain at indeterminate sporadic periods that can basically process a small transaction. I bought coffee with a Lightning transaction, and the cost is a penny for that transaction. And so, and that's coming. But, we need, I've often said, and I was an investor in the internet back in the day, I've often said this kind of reminds me of the early days of the internet where you had dial-up and it was clunky and the browsers didn't work very well. And, Bitcoin's still in the early days. For the first 5 or 6 years, it was a complete experiment, and I remember talking to people and they're like, well, I don't know if this is going to work or not. But we're out of the experiment phase. I mean, we've now got, it's now an asset. We've now even got the US SEC saying it's a commodity, and they allowed ETFs, big steps. And so now that we have this thing and it truly is an asset, the next move is for it to become a form of money that you can transact with. But that's going to take technological time and development for these Lightning solutions to get better. It's very easy to buy coffee with a Lightning transaction. I did a Lightning transaction where I tried to send somebody $2,000. It worked, but it took about a day and it cost a lot. And the reason is there wasn't enough liquidity in the Lightning network. So, that's, like I say, we're early days on using Bitcoin to buy for things. But if you map out the way, think of the original cell phones. I was out when the original cell phone came around, the one that Michael Douglas was talking on in Wall Street. I remember that cell phone. My boss had one. He was a master of the university, made a bunch of money. And I think it cost $1 a minute to talk on that thing when he first, so he'd make a 10-minute phone call. It was $10. Mm-hmm. Of course, now you've got your cell phone, you pay $35 a month. You can make an unlimited number of calls anywhere in the world. Same thing is going to happen with Bitcoin. I mean, this is going to get cheaper, easier, faster. Everyone's going to be able to use it. Mm-hmm. But, you got to give the technology guys time to develop, those solutions.
Larry, I want to kind of, let's say, wrap up with this idea of asking if other countries can kind of do this monetary reset, or if the reserve currency of the world has to do it. Like, can China come out and revalue gold and that become kind of the new standard that everybody starts using? Or is it the US that has to take the lead in that because of the rest of the world needing dollars at this point?
So that's a great question, Tom, and it's a little bit of a chicken and egg question.
One of the biggest questions surrounding the future of money is whether another country, such as China, can initiate a global monetary reset. Lepard suggests that while this is possible, it's ultimately a chicken and egg problem. The U.S. still holds significant power due to the dollar's deep integration into global markets. However, if enough countries shift away from the dollar, the system will reach a tipping point where an alternative reserve standard, possibly anchored by gold or Bitcoin, could emerge. The key factor will be public awareness and demand for sound money policies. Currently, only a small percentage of people understand the true implications of monetary debasement. Please like and subscribe.